Okay, in this tutorial, I'm going to be explaining how I do a quick markup and analyze the chart for the New York session. The New York session is a session that I normally trade, especially when trading US 30, but this type of markup can apply to any session, whether that be London or Asian. All right, so I don't want you to think after watching this video that you have to trade New York session to mark up your chart this way. You can mark up your chart this way for every session. All right. Now, my markup is based off of the previous day's candle and then the current day's candle. Now, what I want from the previous day's candle is I need to identify the previous day's low and the previous day's high. And I do that by drawing a horizontal line at each point. So what I'm going to do first, I'm going to draw the horizontal line at the previous day's low. I'm going to use this candle as my previous day's low, and then I'm going to draw a horizontal line at the previous day's high, right? Try to make that as perfect as you can. Next, what I'm going to do is I'm going to draw a vertical line through the daily candle. Now, the reason why I do this and mark up my chart this way is because if I can track price between the previous day's low and high, then I know that the daily candle will trade within this range, right? Now, price is already above the previous day's high, then I'll be looking for what phase the market is in and then marking up the pattern that I identified and get a directional bias from that area. And if it's already below the previous day's low, I'll do the same. But if we're in between during the beginning of the New York session, then I will look for the pattern inside the low and the high and see which way the market is going to trade toward the previous day's high or towards the previous day's low. All right. So once I do this, what I know about the daily candle is if I go to a lower time frame to the right of this red line, it will give me data. Right. I'm going to show you what I mean by that. If I go to the 15-minute time frame, from the open of the new day, this is the data that was produced. All right. Now, the next thing I'm going to do is I'm going to put the sessions indicator on. And the reason why I do this is because it's going to allow me to identify what happened during each session. Now, the green box is your Asian session, the red box is your London session, and the blue box is the New York session. Where the red crosses into the green, that is the beginning of London. Where the blue crosses red, that is the beginning of the New York session. All right. So what I want to know basically is how did price get here, or why is price in this area, and why hasn't it broke above the previous day's high, or why hasn't it headed toward the previous day's low? And I do that by identifying what happened the previous day. All right. Now, if I look to the other side of this red line on the left, I can dictate why the market is kind of in this pullback phase by identifying, what pattern was formed, right? Now, if you look at this, we do have a break of structure, right? And if you've watched the video on the four patterns, you do know that if we have a break of structure, liquidity has been taken, which means if the bank took liquidity, the next phase is to do what? Create liquidity, right? So if we know the bank is in the phase of creating liquidity, then we can dictate, is the bank, still creating liquidity? Are there opportunities to get into this little short-term sell for a quick scalp, or do I need to wait? So when I'm marking up my chart, I kind of mark up each area. So I'm going to mark up this break of structure, right? I'm going to put BOS right here, just so I know I identified that. I'm going to put resistance right here because we did run into some form of resistance, and that's the reason why the market is pulling back, right? And now I know that there's bearish momentum in the market because we're creating liquidity. Now, depending on what type of trader you are, and we all know that I am a scalper, what I'm going to have to do if I'm going to, get into some form of a trade based off of this minimal data, and as you can see, this is more consolidation and low probability, trading. But, I would look for an opportunity in here because If you understand the differences between time frames, you'll be surprised on what opportunities, are probably presenting itself. Now, this is a 15-minute time frame, and we all know I like to enter on 5 and 1 minute time frames, and I do like to trade US 30. So any type of move on a 15-minute time frame will be significant on a lower time frame. What you have to realize about each time frame is that the world is a lot bigger compared to the lower. You just can't tell. So if I were to put a box around this price action, right, on the 15-minute time frame and go to the 1 minute, you're going to realize that there's a lot of data in there. I mean, look at all this data, right? That's the blue. So there are opportunities in there. We just have to identify what phase the market is in and, adjust accordingly. So because I know that we're in this bearish momentum phase, that we're creating liquidity by tricking sellers, I know that there's bearish momentum into the market. Now, I do trade the New York session, and I do know that New York opens around 8 a.m. Eastern, which is 1400, with this broker. And it should be that way on a lot of foreign brokers. It should be 1400 as 8 o'clock. So right here is the beginning of the New York session. So if I come to my chart, around the New York session, all I want to do is identify what phase the market is in at the beginning of this session. If you look at this, right, we're in a push phase, right? We're in a push phase. And I know we're in a push phase is because it's consecutive bullish candles on a 15-minute time frame, and we broke above a high. I also know that we did what? We made a low, and we're in the process of making a high at the beginning of New York. So if I see that the market has broken above this high, I'm going to draw that as a break of structure, right? And now, if my direction of bias is bearish because I know that the market is creating liquidity, then I'm going to look to the left to see if I can spot an area of resistance. And as you can see right here, the market is treating this area as support, right? So from this area right here, I can have a directional bias of bearish because this looks like what? The bank broke structure. We pulled back to create liquidity below these lows, and now there's most likely an opportunity to trade to the downside. All right. Now, what I would do is I would put a box in this area, right? And then I would go down to a lower time frame to see if the system is going to either show me a resistance line or arrows pointing in this direction. If I go to the 5-minute time frame, right, notice where my box is, I have the resistance line. I probably would have had like a red dot and a couple of yellow dots, not this full one yet, but it's letting me know that there's an area of resistance here, right? And then if I go to the 1-minute time frame, I'll most likely have my arrows telling me that I'm right about this area of interest. Now notice we have a high, a low, and a break of structure, right? On the 1-minute time frame. So I can actually mark that now, right? So if this is my area of interest, right? And I predict that the market was going to do what? Continue with the trend because why? We're in the phase of the bank creating liquidity, right? Then I know that this signal most likely is correct. So what I'm going to do, I'm going to agree with it. I'm going to draw a vertical line and I'm going to look down at my confirmations. Now notice at this point, we are trading this pattern, right? We're trading pretty much a reversal on that 1-minute time frame. All right. So we're overbought. The signal line is outside of the graph, and we have bearish momentum on the right side of my line. We have all 3 arrows pointing in the direction of my bias. So all I need to see is what phase the market is in before I enter. And as you can see, in this area right here, we're in a push phase. We did break below this low. So I know the next phase for the bank to do what? Trick buyers, right? So we're going to trick buyers to create liquidity below this low. This will give me an opportunity to put my RTD, right? Here's my RTD, right? And now I know that my entry needs to be above the RTD, right? So it can be right here at this moving average crossover. If I enter here, my stop loss will go above the previous high. And if I'm going to take this 1 minute scalp, I know below this low is liquidity. So I can easily make that my take profit for a quick scalp. If I enter here, I'm going to trade toward this low, take out the liquidity, and go right to my take profit for a little over 800 points, right? Now, we do know from the 15-minute time frame that the bank could go a little bit lower. And the reason why is because we're in the phase of the bank creating liquidity. If you look to the left, the market pushed up, pushed down. We did push up. We did push down. There is an area of liquidity here. And if I stayed in the trade a little bit longer, we would have hit take profit for a significant number of points. That's actually a little over, that's around a little over 1,900 points if I'd identified the liquidity here and stayed in a little longer. All right. That's how I analyze the charts, guys. Very, very simple. I'm going to show you another example. All right. So we're going to look at let's look at NAS 100. All right. We'll do the same type of analysis. All right. So what I'm going to do is I'm going to start on the daily time frame. I'm going to mark up the previous day's high, previous day's low. All right. I'm going to draw a vertical line through the daily candle. All right. I'm going to put my sessions indicator on. Right? And then I'm going to drop down to the 15-minute time frame. Right? And this is pretty much the same. All right. So looking at this, my main goal is to find out why is price even over here and why have we broke above the high of the previous day or the low of the previous day, right? This is the data that's already been produced from the daily candle that I've drawn this vertical line through, all right? So why is price over here? Well, I have to look to the left to figure out why. And I can clearly see that we did what? We had a break of structure, right? We had this high here. We broke it, right? And then the market ran into some type of resistance. And as you can see, look, break retest. So we did hit an area of resistance. And that's the reason why the market is pulling back, right? So if the market is pulling back, right, I know that the bank is creating liquidity, right? So if the bank is creating liquidity, then I need to look and see, is it finished or what phase the market is in at the beginning of the session. I like to trade, and I like to trade New York session. This is the beginning of the New York session, right? 1400. All right. So if you look closely, right around this time, what phase is the market in? I'm going to zoom in so you can see this. Right around here, what phase are we in? We're in another push phase, similar to US 30. We're in this push phase to the upside, right? If you look to the left, we've made a low, a high, a low, and we made a high. And we know that the bank is creating liquidity because we just took out liquidity, right? And there is liquidity to the left. All right. So right here, same thing. I'm going to mark up my pattern. What do I see? I do see a break of structure. And if I see a break of structure, then there is a low to that break of structure. So we're going to draw a box here, right? Remember what we said about the 15-minute time frame. This world is a lot bigger on lower time frames. So what we got to do is we just got to, play the part. Break of structure. What comes after a break of structure? The bank must create liquidity. So right here is my area of interest, right? And we know the market has to run into some form of resistance, right, to create that liquidity. And as you can see, break, retest, we're, treating this area as support, right? And if you know anything about order blocks, we did run right back into this last up candle before this down move, right? That's just getting a little bit more advanced. But right here is my area of interest where I drew this box. So what do I want to see in this area on the 5-minute time frame? Either the resistance line or arrows. Let's go down to the 5 minutes. Resistance line, let's go down to the 1 minute. And we have arrows. This is very Scotch. This is spot on to US 30. Wow. All right. Same thing, guys. I'll zoom out a little bit. Same exact thing. Draw the vertical line, overbought, signal line, bearish momentum. The market goes into a push phase. The next phase is to trick buyers. Notice we did break below this low, right? So there's a break of structure in there, right? Below here is your opportunity to write RTD. That's me spotting the bank create liquidity, right? RTD. And then I'm going to enter up here, trading toward the RTD, right? There's my entry. Stop loss can go above the previous high. And now what am I doing? I'm targeting liquidity. Now, I do know that there's liquidity below this low. These people bought, so there's stop losses here. If I want to just do a quick 1 minute scalp, I'll make this my take profit, and I can be done with my day a lot sooner. I enter here, take profit gets hit for about 500 points. Now, I do know the market should go lower. If I go back to that 15-minute time frame, I can look and see where there's areas of liquidity. And right here is a good sign. We have imbalance right here. So that would be my take profit. And I would stay in a little bit lower and as you can see, if I stayed in this trade down to that imbalance, to the wick would have been about 1,500, 1,600 points. And I'm out of that trade. This is the reason why I mark up my chart that way, is because I know that the daily candle dictates the play for the day. And if I identify my pattern, one of these, 4 patterns based on the phase the market is in, then I'm going to spot a good opportunity each day. All right. Very, very simple, guys. Let's do one more. Let's look at, let's look at GBP USD. I don't trade this, but we'll do it on here. All right. This is the daily candle. Daily time frame, excuse me. And we'll do it this way. We'll use this green candle as a previous day. This is the previous day's high. I'll zoom in so you can see which candle. All right, we're going to use this candle right here. All right. That is your previous day's high for GBP USD. That is the previous day's low. All right. I'm going to draw a vertical line through this candle. And then I'm going to drop down to the 15-minute time frame. Zoom out a little bit. Right. I'll put the sessions indicator on here. All right. Boom. And now, and this is, I trade New York sessions. We're going to go based off New York session. All right. Now, New York session starts at 1400, right? Right here. So if I come to my chart at that 1400 time, right, basically what I have to do is analyze why the market is even over here in the first place and what phase the market is in at the beginning of New York. And this one actually is pretty easy, right? I'm going to show you what I mean by this. All right, now look at this. Why is the market even over here? And we're going to do it based off of liquidity. Look to the left, because that'll tell us why the market is over here. We did have a break of structure, right? We had these sellers that got stopped out by this break of structure. The market did run into an area of resistance. We got our arrows, and then the market did trickle down. This is the bank creating liquidity, right? So if we are in this downtrend, and I know that there's liquidity below this low, because if we had a break of structure, that means we have a low, right? We have a low, right? So there's buyers, there's sellers, so there's liquidity below this low, there's liquidity above this high, right? Now, this is the beginning of when New York opens. So what phase was the market in at New York Open? Well, look at the pattern that's formed here. Remember, this is the 15-minute time frame, and I am a scalper. If I draw a line right here, we had a break of structure. What comes after a break of structure? The bank will do what? Create liquidity. And what are we doing right now? We're in a small downtrend, which means we're going to be looking at this pattern. break of structure. The bank is going to create liquidity and then continue. All right, so look what we have. We have a low, we have a high, and we have this break of structure. So if the market is in the phase of the bank creating liquidity, then below this low is what? My RTD, right? So what I'm going to do is I'm going to go to the lower time frame. I'm going to mark this area as my area of interest, and I know I want to trade toward this low, and I know that below this low is liquidity, so we need to go past this area anyway. Let's go down to the 5-minute time frame and see what we got. All right, so we don't have any signal here. Let's go to the 1-minute time frame. See what we got. And look, 2 arrows right here. So what do we have below this low? RTD, right? So if that's the case, right, here's your resistance line. I'm going to draw a vertical line right here. Overbought. We can wait for the signal line to come outside of the graph. It does right around here on that second arrow. And the XP4 indicator has flipped, right? Now notice, all I have to do is enter above the RTD and I'll go right into profit. Even on the 1-minute time frame, we have an opportunity to get a really good risk to reward. The market goes into a push phase. We trick buyers again, right? So even below here, we have an RTD as well. Your entry could be here. Stop loss goes above previous structure high, and you're in this trade, right? Now we know that the market is going to do what? It is going to trade toward liquidity on the higher time frame. So once you enter here, right? I'm gonna put this box a little bit more smaller. Once you enter here, right? We know that the bank is going to do what? Go to at least below this low. So how many points is that from here to here? That's 50 pips. If you stayed in a little bit longer, 76 pips at New York Open. And we're still trading the same pattern. Low, high, break of structure. After a break of structure, the next phase is to do what? Trick buyers. Below here is your RTD. Your entry is here. Market drops. Right? Low, high, break of structure. The next phase is to trick buyers. RTD, you enter high. The market drops. All right? That's how I spot these opportunities, guys. All right? Very, very simple. All right? Hopefully, you guys got some value out of this, and you'll be able to apply what you've learned here to your charts. All right. Have a good one, guys.